This is Tuesday, February 10th, 2026. Silver is sitting at $80. $80. A year ago, silver was $32. 12 months. That is all it took for silver to go from $30 to $120 and then crash all the way back down to where we are right now. And if you are watching this thinking the move is over, thinking the rally is dead, thinking it is time to walk away, I need you to stop everything and watch this entire video. Because what is happening right now in silver is not what the price is telling you. The price is telling you one story, the data is telling you a completely different one. And by the end of this video, you will know which one is lying. Silver just bounced 7% in a single session. Gold is back above $5,000 an ounce. And the entire financial world is holding its breath, waiting for two numbers that drop this week. Non-farm payrolls tomorrow, CPI on Friday. These two data points could change everything. They could reshape the entire precious metals market overnight. And most people are not prepared for what is coming. But before we get to that, I need to show you something that nobody else is talking about. Something that will completely change the way you look at this $80 price tag. Because $80 silver is not a crash. It is not a collapse. It is not the end. It is a trap. And I am going to show you exactly how it works. Welcome to MRAG Asian Guy. This is where I break down what is really happening in global markets while the mainstream media feeds you headlines designed to make you emotional and reactive. If you are new here, subscribe right now, hit that notification bell. Because the information in this video could be the difference between making a fortune and losing everything. And if you find value in what I am about to show you, smash that like button. It tells the algorithm to push this video to more people who need to see it. And trust me, they need to see it. Now, let me tell you why $80 silver is not what it seems. And pay very close attention because this is where the real story begins. 2 weeks ago, silver was trading above $120. $120 an ounce, the highest levels in decades. The rally from mid-2024 was nothing short of historic. Silver went from the low 30s to $120. Gold pushed past $5,600. The metals run was gigantic. It was one of the most powerful precious metals rallies in modern history. And then, on a Friday, the last trading day of January, they crashed it. Silver dropped from $121 to $95. Then it kept falling, all the way down to where we are now, around $80. A $40 drop from the highs, over 33% erased. And right on cue, the headlines started, silver crashes. Bull market over, time to sell. Get out now. But here's what those headlines are not telling you. Let me show you the facts, not opinions, not predictions. Facts. Fact number one, silver just rallied 7% in a single session on Monday. After one of the most brutal sell-offs in years, buyers came in hard. They did not trickle in. They flooded in. A 7% move in one day. That is not what a dead market looks like. That is not what a finished rally looks like. That is what a market full of buyers waiting for a discount looks like. Fact number two, gold is back above $5,000. Let me say that again. Gold is above $5,000 an ounce. The biggest, most trusted safe haven asset on the planet is trading at all-time high territory. And people are telling you the precious metals rally is over. Does that make sense to you? Gold at record highs and silver is dead? No, that is not how this works. Fact number three, China just extended its gold buying streak to 15 consecutive months. 15 months in a row. The People's Bank of China has been buying gold every single month for over a year. They are not slowing down, they are accelerating. And it is not just gold. They have classified silver as a strategic national security asset. They are restricting exports. They are draining their own exchange vaults. Fact number four, U.S. retail sales just came in at 0%. The expectation was 0.4%. It missed. It missed badly. The American consumer is weakening. And when the consumer weakens, the Fed has to respond. Rate cuts come into play. And when rate cuts come into play, precious metals benefit. Every single time. Now let me ask you a question. If the rally was over, if silver was done, if the bull market was dead, why is every single piece of fundamental data telling you the opposite? The answer is simple. The rally is not over. What happened was a shakeout, a violent, deliberate, engineered shakeout designed to separate you from your position. And based on what I see in the data, they are almost done shaking. What comes next could be the most explosive move yet. Let me show you why. Let me start with what is happening this week because timing matters. And this week, the timing is everything. Tomorrow, Wednesday, February 11th, the U.S. Bureau of Labor Statistics releases the non-farm payrolls report. This is the single most important economic data point in America. It tells you how many jobs the economy created. It tells you whether the labor market is strong or weak. And right now, it might be the most consequential NFP in years. Here is why. The Federal Reserve has been sending signals. And if you have been paying attention, And I know you have, because you are watching this channel. You know that the Fed's recent communications have been tilting toward employment. Not inflation. Employment. That is a major shift. For the last 2 years, the Fed has been obsessed with inflation. Every press conference, every statement, every dot plot was about prices. But recently, the language has changed. They are now watching jobs. They're watching the labor market. They're concerned about a slowdown. And that means tomorrow's NFP is not just another data release. It is a potential trigger. If the jobs number misses expectations, if it comes in weak, the probability of a March rate cut changes overnight. Right now, markets are pricing a March cut at only 20%. That is low. That means most traders do not expect a cut. But a weak NFP could change that number dramatically. It could jump to 40%, 50%, maybe higher. And when rate cut expectations rise, what happens? The dollar weakens, yields drop, and precious metals, gold and silver, they rally hard. Now here's the other side. Friday, February 14th, we get the CPI report, the Consumer Price Index, the inflation number. If inflation comes in hot, it complicates things. The Fed cannot cut if inflation is accelerating. But if CPI comes in soft, in line, or below expectations, combined with a weak NFP, you have the perfect storm for precious metals. A weakening economy, cooling inflation, and a Fed that has to cut rates, that is the most bullish setup for gold and silver you can possibly have. And we are potentially 2 days away from it. This is why I told you to pay attention. This is why timing matters. The crash to $80 happened for a reason. They wanted you out before this data hits. They wanted your position before the potential catalyst arrives. Think about that. Really think about it. Now let me show you what is happening beneath the surface. Because the macro data is only one piece of the puzzle. What is happening in the physical silver market right now is something I have never seen before in my years of covering this space. The supply deficit in silver has now persisted for 5 consecutive years. 5 years. Since 2021, global silver demand has exceeded global silver supply every single year without exception. Let me give you the numbers because numbers do not lie. Global silver demand reached 1.2 billion ounces in 2024. Let that number sink in. 1.2 billion ounces. And it has remained elevated through 2025 and into 2026. Global mine production is approximately 835 million ounces per year. Do the math. 1.2 billion ounces of demand. 835 million ounces of supply. That is a deficit of over 350 million ounces every single year. Where does the extra silver come from? It comes from stockpiles, reserves, vaults, above-ground inventory that was built up over previous decades, and those stockpiles are running out. The cumulative deficit over the past 5 years is over 800 million ounces. 800 million ounces of silver that was consumed but never replaced, gone, used up. It does not exist anymore. And here is what makes this truly alarming. The demand is not speculative. It is not retail investors buying coins. It is structural. It is industrial. It is permanent. Solar panels. The world is installing solar capacity at a record pace. Solar panel manufacturing alone could consume up to 250 million ounces of silver annually by 2030. That is almost a third of total mine supply going to just one industry. Electric vehicles. EVs use roughly twice as much silver as internal combustion vehicles. Every electric car that rolls off the assembly line consumes more silver than the car it replaces. Data centers, AI infrastructure, 5G networks, advanced electronics, medical devices. Every single one of these growth industries requires silver, and the demand is not going away. It is accelerating. This is not a demand story that depends on retail sentiment. This is not a meme trade. This is structural industrial demand that will only grow as the world electrifies, digitizes, and modernizes. And here's the paradox that should keep you up at night. The price crashed to $80. But did any of that demand go away? Did the solar industry stop needing silver? Did EV manufacturers find a substitute? Did data centers stop being built? No, none of it changed. The demand is exactly the same as it was when silver was $120. The only thing that changed is the paper price on a screen. The fundamentals did not crash, only the price did. And when price diverges from fundamentals, one of them has to correct. It is not going to be the fundamentals. Now, let me show you what China is doing because this is the part that should genuinely concern anyone who is thinking about selling. China is pulling back from U.S. treasuries. This is not speculation. This is confirmed. Chinese regulators have asked state-linked banks to reduce exposure to U.S. dollar-denominated debt. They are limiting new treasury purchases. They are trimming oversized positions. China's treasury holdings have been declining for months and now sit well below prior peaks. Stop and think about what that means. China is the second largest economy on Earth. They hold trillions of dollars in foreign reserves, and they are actively, deliberately, systematically moving away from the U.S. dollar. Where's that money going? Gold. 15 consecutive months of gold purchases by the People's Bank of China, and silver. Strategic national security classification, export restrictions, vault draining. China is selling America's debt and buying physical precious metals. They are trading paper promises for real assets. They are trading someone else's liability for something they can hold in their own vaults. And they are not alone. Central banks around the world are doing the same thing. The de-dollarization trend is not a theory anymore. It is happening in real time, with real money and real quantities. Now ask yourself a simple question. Who do you think knows more about the future of the global monetary system? A retail trader watching a red candle on a chart? Or the People's Bank of China, which has been accumulating gold for 15 straight months and treating silver as a national security asset? The answer is obvious. Follow the smart money. And the smart money is accumulating everything you are being scared into selling. Now let me talk about something that most precious metals channels will not talk about. And this is important because this is changing the game in ways most people do not understand yet. Tokenized gold and silver have become the hottest trades of 2026. Yes, you heard me right. Gold and silver are now trading on crypto platforms, on-chain, 24 hours a day, 7 days a week. Why does this matter? Because it is creating an entirely new source of demand, an entirely new pool of buyers, an entirely new market that did not exist 2 years ago. Here is what is happening. Crypto investors, and the same people who trade Bitcoin and Ethereum, have discovered that gold and silver are outperforming crypto in 2026. Gold and silver are outperforming Bitcoin on a year-to-date basis. Let me say that again so it sinks in. Gold and silver are beating Bitcoin this year. And crypto traders, who are used to volatility, who are used to leverage, who are used to 24/7 markets, they looked at silver moving $30 in a single session, and they said, that is our kind of trade. So what did they do? They brought silver on chain. Hyperliquid, one of the biggest decentralized exchanges, is now trading approximately $1 billion in daily silver futures volume. $1 billion per day. Silver is ranking just behind Bitcoin and Ethereum on the platform. Think about that. Silver, a physical metal that comes out of the ground, is now one of the most traded assets on a crypto exchange. Tokenized gold products like Tether Gold, Pax Gold, and Kinesis Gold are seeing massive inflows. Tokenized silver products are following. People are buying digital claims on physical metal held in vaults. They are using these tokens as collateral in DeFi lending protocols. They are creating yield-bearing gold products. They are trading silver perpetual futures with leverage around the clock. This is a completely new demand channel that did not exist during any previous metal cycle. In 2011, when silver hit $50, there was no crypto. There was no on-chain trading. There was no tokenized metal. There was no 24/7 leveraged access to silver for anyone with a smartphone. Now there is. And it is growing at an exponential rate. Do you understand what this means? Every cycle, precious metals have had the same buyers: institutional traders, central banks, physical buyers, ETF investors. The pool of potential buyers was fixed. Now, that pool just expanded by hundreds of millions of people. Every crypto investor on the planet now has access to gold and silver, 24 hours a day, with leverage, with instant settlement, with no brokerage account required. This is the most important development in the precious metals market that nobody in the traditional space is talking about. A massive new demand source has entered the market. And they are not buying for the same reasons your grandfather bought gold. They are buying because silver moves $30 in a day, and they can trade it with 50x leverage at 3 in the morning. This demand is additive. It adds to everything else. Industrial demand plus investment demand plus central bank demand plus crypto demand. The demand stack has never been this deep, and the supply has never been this tight. Now let me address the technical picture, because I know many of you want to understand where silver goes from here on a chart. Right now, silver is testing the $80 level. We are sitting just above the 50-day exponential moving average, which is providing support directly underneath price. This is a significant technical level. If $80 holds, and I believe it will based on the buying we saw on Monday's 7% bounce, the next target to the upside is $90. The $90 level has been a resistance zone. It has rejected price a couple of times, but each time it rejects, the pullbacks are getting shallower. That tells you buyers are getting more aggressive. They are not waiting for deep discounts anymore. They are stepping in earlier. If we clear $90 with conviction, the road back to $100 and beyond opens up. Now, if $80 breaks to the downside, the next major support sits at $70. That is a level that has held for several weeks. It is a strong floor. I would consider $70 the line in the sand. Below $70, the short-term picture gets complicated. Above $70, the bull market structure remains intact. But here is what I want you to focus on. Not the exact levels, not the exact numbers, the range. What we are seeing right now is silver trying to establish a range, Probably a $20 range, between $70 and $90. And that is healthy. I know that sounds boring. I know people want to hear that silver is going to $200 next week. But the reality of how markets heal is through consolidation. The crash from $120 created massive damage. That is real. You can see it on the chart. That giant red candle is a scar. And scars take time to heal. What the market needs right now is time. Time to absorb the selling, time to build a base, time for the weak hands to finish exiting and the strong hands to finish accumulating. That process is happening right now. The 7% bounce on Monday was part of it. The choppy back and forth is part of it. And while the price chops around in this range, doing nothing exciting, doing nothing dramatic, the fundamentals continue to tighten. Every day in this range, more silver gets consumed by solar panels, EVs, and electronics. Every day, the deficit grows by about 1 million ounces. Every day, the stockpiles get a little smaller. Price is resting. Fundamentals are tightening. That is a coiled spring, and when it releases, it will be violent. Now, let me tell you about something that is quietly crushing the American consumer. And this connects to silver in a way most people do not realize. Tariffs. The trade war is not over. It is escalating. And new research shows that broad U.S. import tariffs are functioning as a hidden tax on American households. The numbers are staggering. The average American household paid approximately $1,000 in tariff-related costs in 2025. That number is expected to rise toward $1,300 in 2026 if current policies remain unchanged. And here's the critical detail. A study from the Kiel Institute found that Americans absorb roughly 96% of the total tariff burden. 96%, not foreign exporters, not Chinese manufacturers, American consumers. Every time you buy electronics, every time you buy an automobile, every time you buy imported goods, you're paying a hidden tax. It does not show up on your receipt. It does not show up on your tax return. But it is there, built into every price, eating into your purchasing power. This is inflationary. Tariffs push prices higher. They add friction to the supply chain. They raise costs for businesses who pass those costs directly to you. And when inflation runs hotter than expected, what happens? Your dollars buy less. Your savings lose value. Your purchasing power erodes. And what is the one asset class that has protected purchasing power for 5,000 years of human history? Precious metals. Gold and silver. The only money that cannot be printed, cannot be tariffed, and cannot be inflated away. This is why the crash to $80 is a gift. Not because the chart looks pretty, not because of some technical pattern, because the fundamental reasons to own silver have never ever been stronger than they are right now. Industrial demand at all-time highs, supply deficits for 5 straight years, central banks accumulating at record pace, a new crypto demand channel adding billions in volume, trade wars creating hidden inflation, a weakening consumer, a Fed that is about to pivot to rate cuts, and a physical market so tight that mints around the world have suspended sales and dealers are defaulting on deliveries. And in the middle of all of this, they crashed the paper price to $80 and told you it is over. It is not over. It is just beginning. Now let me address the people in the comments who will say, I am wrong. Who will say this is hopium. Who will say silver always disappoints. Well, you're entitled to your opinion. But I deal in data, so let me give you data. Silver was $32 1 year ago. It is $80 today. That is a 150% gain in 12 months, even after the crash, even after the so-called collapse, even after the worst weekly sell-off in years. Silver has still more than doubled in a year. Gold was $2,000 18 months ago. It is above $5,000 today. A 150% gain. Central banks are buying it at a rate we have never seen in modern history. The precious metals bull market has produced generational returns. And you are going to tell me it is over because of one bad week? The 2008 financial crisis saw gold drop 30% before rallying 180% over the next 3 years. Silver dropped 50% in 2008 before rallying over 400% to $50 by 2011. Every single major bull market in precious metals has had violent corrections along the way. Every single one. That is how bull markets work. They shake out the weak, they reward the patient. In Pakistan right now, people who cannot afford gold at $5,000 are pivoting to silver. They are buying silver bars. They are buying silver jewelry. Gold has become too expensive for ordinary households. Silver is their entry point, their affordable hedge against inflation, against currency debasement, against uncertainty. This is happening across Asia, across the Middle East, across the developing world. Billions of people who are experiencing real inflation, real currency weakness, real economic stress, and they are turning to silver because it is the one precious metal they can actually afford. That demand is not going away because the COMEX price dropped from $120 to $80. If anything, the lower price is bringing in even more buyers. The crash created a buying opportunity for billions of people. The lower the paper price goes, the more physical demand it creates. That is the paradox. And that paradox is going to break this market wide open. Now, there are three types of people watching this video right now. The first type saw silver crash from $120 to $80 and they sold, or they are thinking about selling. The red candle scared them. The headlines scared them. The noise got into their head. They are making emotional decisions based on paper price movements while ignoring every single fundamental data point I just showed you. The second type is sitting on the sideline, watching arts, waiting, paralyzed by conflicting signals. The price says sell, the data says buy. They do not know who to believe, so they do nothing. And doing nothing while the clock ticks on the supply deficit is a decision in itself. The third type understands. They understand that paper prices can be manipulated. They understand that physical supply cannot be faked. They understand that central banks do not buy gold for 15 straight months because they think metals are going down. They understand that a 33% correction in a 150% plus bull market is not the end. It is a reset. It is a chance to add. It is a gift. Which type are you? Let me leave you with this. 1 year ago, silver was $32. Today, it is $80, and people are calling it a crash. Think about the absurdity of that. Silver has more than doubled in 12 months, and the narrative is that it is over. Gold is above $5,000, and people say the metals rally is done. China is buying gold every single month for 15 months, and people say precious metals are not in demand. Mints have suspended sales, and people say there is no supply issue. 1 billion per day is trading in silver on crypto platforms, and people say there is no new demand. 5 straight years of supply deficit, and people say the fundamentals do not support higher prices. The American consumer is paying $1,300 a year in hidden tariff taxes, and people say there is no inflation risk. The Fed is shifting its focus to employment, and people say rate cuts are not coming. Every single piece of evidence points in one direction, and the paper price is pointing in the other. One of these is wrong, and I promise you, it is not the fundamentals. They want you to sell at $80. They want your position. They want your metal. They are shaking the tree as hard as they can to make you fall out. Do not fall. This week's NFP and CPI could be the catalyst that turns everything around. If the data misses, if the economy shows weakness, if rate cut expectations surge, silver and gold could move hard and fast to the upside. And everyone who sold at $80 will be watching from the sideline, wondering what happened. I will be here, covering every data release, every market move, every piece of the puzzle. Subscribe if you have not already. Hit the notification bell so you do not miss what comes next. Drop a comment telling me, do you think $80 is the bottom? Or do you think we go lower? I read every single comment and I will respond. If this video helped you see through the noise, share it with someone who needs to hear it. There are a lot of scared people out there right now. A lot of people making decisions based on fear instead of facts. Be the person who sends them the facts. Remember what I told you at the beginning. The price crashed to $80, but the fundamentals have never been stronger. The demand has never been higher. The supply has never been tighter. That is not the end of a story. That is the beginning of one. This is Mr. AG, Asian Guy. The real story is never on the surface. I will see you in the next one.